Welcome. Kevin and I are back with another episode of Financial 15, the show where we try to improve your financial knowledge, do all of that in under 15 minutes. And today we're talking about pensions. What happens to your pensions when you die? Specifically the government pensions, CPP, OAS. If you pass away, what's left for the survivor? We're going to cover all of that today.
Yes, pensions, another topic we get a lot of questions on. So please, if you want to check this out or any of the other ones we've done on CPP or OAS, please feel free to check out our website at beckerorr.com or go to our YouTube channel where we've got a variety of these financial 15s and back and forth, or like us on Facebook and we can go from there. But to start us off, Clint, what happens to my government pensions when I die?
That's the big topic today. That's the big question. In an intro, we got to do a little back step here. We're talking about the two government pensions, the federal pensions, the old age security known as OAS and the Canada pension CPP. We've done other videos on these. We're not going to go in detail today, so you can check out the other videos if you want all the detail. Today, we're asking what happens when we die. And we'll start here, Kevin, with old age security, OAS. A quick reminder for folks, OAS, we can't take it early. You have to take that one at 65. That's no one pays into it directly. It's funded by tax revenue, and it's based on residency. And usually people get close to the maximum. They normally get about $600 a month. What happens to that money, Kevin, when someone passes away?
Well, to put it in plain form, you lose it. It's done. That's it. You don't get anything else. Your spouses, anybody else in your retirement form, they get nothing. Now, that's not completely true. For the majority of people out there, it is. If you pass on, there is no benefit that goes to anybody else you have. But there are certain criteria where this doesn't apply. And that will be along the lines of looking at an allowance for the survivor or a GIS. As we can mention, most of these things will all be based on income. How much are you earning? If you do not earn enough, the government will do some odds and ends along that line. In the case of the allowance for a survivor, you have to be between the ages of 60 and 64. So it's a very small window to deal. You have to be a Canadian citizen. One important thing to remember is you cannot remarry, because if you do remarry, you lose it automatically. You will not get anything. Your income has to be less than $2,500, and then you can receive a payment that goes on. So as I say, for most people, this won't apply to them. But if it does, this is an allowance that can deal with it. Besides the allowance, we've also got the GIS, Clint. What are we talking about when we deal with that?
Yeah, that's the guaranteed income supplement. So it starts at 65. So that first window, your spouse passes away from 60 to 64, you can qualify for this allowance if you're under 25,000 of income. If you're over 65, well, then the guaranteed income supplement might kick in. Similar criteria in terms of qualifying, like the allowance. There's lots of categories for the guaranteed income supplement. We're zooming in here just on the one that'd be applicable for a widow. So if you had a partner and they passed away, you could qualify under this category, which means you need under 19,000 of income. You can see the bolded number on the slide there, 18,984. That's the number here in 2021. And you'd get a payment up to $935. At 65, you'd also qualify for your own old age security. So you get that payment in addition to your own OAS. So if you have income below one of those thresholds, the 25,000 or the 19,000, you could qualify for one of these programs. However, if your income is above that and your partner passes away, the old age security is essentially gone. There's no death benefit. There's no survivor benefit. There's only items if your income is below a certain threshold. So moving on, Kevin, we'll talk about the CPP. This is the other big program. This is the larger of the two. Yes. Why don't we start off with a quick two-sentence explanation here. What is the CPP?
Yeah, CPP is as opposed to what we've had beforehand with OAS. It's not residency-oriented. It depends on how long you've worked. And if you've worked a certain number of years, usually it's over the age of 18 and things, and you start paying into the CPP pot. Now, when you pay into it, you're going to collect a certain amount down the road. So you're usually looking for contributions for a certain number of years in there and a certain percentage that you can get down the road. So CPP you're paying into, it's a pension that you're going to get down the road. It is indexed going forward, and your amount is based on whether you take it early or whether you take it later. But 65 is the normal age that we're always wanting to look at.
There we go. And then I'll throw you the question, CPP, what happens to that pension when you die?
Well, I can't say the same thing as the other one. You lose it. There's actually a variety of different things that go on with this. So as we say, the first one there, you get a death benefit. And that death benefit is a flat $2,500. And as opposed to most insurance plans or something that will pay you out, which are not taxable, this $2,500 is taxable. It goes to the estate of the deceased. and it will be taxable for income for them. Now, again, one thing to mention, this is not at present index oriented. So a few years ago, it was 2,500. We're looking going forward, it's going to be 2,500. So it's not one of those things that you can assume is going to go up every time. But that's just one of the factors that we can deal with. Clint, what's another one that we have to worry about with CPP?
Yeah, there's a bunch for CPP. So unlike OAS, CPP, we pay into it. So there are lots of survivor and death benefits. Quickly on the death benefit, you do have to qualify. So you have to contribute to CPP for a minimum amount of time before that death benefit will get paid. So you have to make 10 years worth of contributions, or roughly 1/3 of your contributory period. For most folks, the contributory period starts at the age of 18. So you have to meet one of those criteria in order to qualify for the death benefit. And I'd say most people do get that death benefit, that $2,500 of taxable income towards the estate. There are other benefits, though. Let's get into that. So you pass away, your CPP, you've made payments into that. CPP could actually be making payments to your kids. So there is a benefit for children, for the children of the deceased. And it does apply to dependent children. They do have a definition of that. So if a child is under the age of 18, they're a dependent. However, also, if they're a full-time student in between 18 and 25, they also can qualify as a dependent and continue to receive these benefits for children from CPP. Once they turn 25, however, there's no more payments. It's a flat amount. It's adjusted annually. For 2021, that amount is $257.58 per month. So if you pass away, your contributions are not necessarily gone. You could be getting a benefit to your children that'd be paid out from CPP. And it has similar contribution criteria as the death benefit. You have to contribute to the plan for a minimum amount of years before this would kick in. So there's a death benefit, there's benefits for the children, Kevin, and there's also benefits for the survivor. So let's get into that question. How much does my spouse receive if I pass away?
Yeah, the survivor spouse is going to get something. But again, there are a variety of different criteria as to how this works. What's the age of the spouse? Are they collecting CPP now? We're going to go into a few of these sort of scenarios just to figure out exactly how it plays. So, right, as opposed to like OAS, where I'd mentioned beforehand, if you remarry, you lose it. Even if you remarry here, you're still going to collect a survivor's pension. And your survivor's pension is basically based on if you pass away, if you're not collecting CPP or under 65, they do a government calculation. That's how they figure out how much you're going to get. If you are collecting CPP, it's going to be something else that's used with that number. How much are you getting right now? How much can they get over there? So they do have criteria for how you qualify. But if you are a spouse, you definitely will be getting something of this going forward. Again, assuming you've met some of the ones that you've mentioned before for death benefit and things along that line. What else, though, do we have with the survivor's benefits? How do we work it with age?
Yeah, there's lots of criteria here. So the first criteria you hit right on the head there. They got to have a number, right? So they have to pick a number to say, we're going to base this off of what? So if you're already collecting CPP, it's easy. They're going to base it off the amount you receive. If you're not collecting CPP or under 65, they'll do a calculation. Say, all right, you paid all this money into the plan. We think you would have received this amount at 65. So now they have a number. And then they'll take that, and how much does the spouse actually receive will depend on their age. So it gets a little more complicated. If the survivor is over 65, it's a simple formula. They get 60% of your pension. So if you're getting $1,000, you pass away. If your spouse is over 65, they'll get 60% or $600 out of your pension per month. Now, as of March of 2021, the average pension from this category is $315. The maximum someone can receive in this category is $722. There's a different formula, though, Kevin, if the survivor is under 65. How does it work in that case?
Yeah, under 65 is completely different because now we don't know whether you're collecting or not. You might be something along those lines. But this one, as opposed to the 60%, it is a flat rate plus 37.5% of a spouse's pension. So that's an important thing to realize, that there is a flat rate involved in it plus a percentage that you get. Now, as of March of 2021, as we can see, the average pension is about $557.07. And the maximum you're going to get, of course, is $650.72. So again, if they're receiving the survivor's pension prior to it, when you take your own, a calculation will be done again to see what you can combine for. And the rationale is because if you're collecting a high amount here and you're going to collect a higher amount down the road, can we do that? That's one of the things that we have to take a look at. So
absolutely, yeah. So we're telling you how much the survivor could receive. That's what they're entitled to. Doesn't mean they'll actually get that full amount. There's a little wrinkle in the CPP program, and the most an individual can receive is the maximum monthly pension. This is calculated every year. It is adjusted for inflation. For 2021, that maximum is $1,203.75. That's the maximum pension. at the age 65. And we'll go through a quick example here so you can see how it might play out. So let's assume for a second here, Kevin, that we're in 2021. We got that maximum CPP benefit of $1,200. I'm getting $1,000 per month. My spouse is getting $800 per month. If I die, you think a simple calculation. If my spouse is over 65, they use the formula. Well, my spouse would get 60%. So I was getting $1,000. They should get $600. They have 800. They're entitled to 600. You think you'd add those up, you'd get $1,400 a month. Not the case. They'll get the cap, which is that $1,203. So they won't get the full amount. They'll bump into that cap, and we'll get roughly $1,200 per month. So a little bit of a wrinkle there, Kevin, people have to be aware of.
Yeah, I think a lot of people don't realize that, they think they're going to get more, but you're right. The government has capped this at a maximum amount that any one individual can get, no matter how many pensions you're collecting from it government-wise. So that's the basic thing we got to look at beforehand. But besides that, if these things happen, what do we have to do? We have to make an application for any of this stuff going forward. So it doesn't just automatically come to you because someone's passed away. You have to apply for it, whether it's the allowance for survivor or GIS on the OAS side, whether it's the CPP Survivor Benefit for kids or the death benefit. All these things do have to be applied for, and they do have to be applied for within a certain time frame. That time frame, they can usually go back 12 months, but if you wait beyond that, you're not going to collect any of the benefit beforehand. So they would suggest that you do it earlier rather than later, just the way the government paperwork works. So those are things that you have to know. Again, application is necessary to be able to do this. Other than that, Clint, are there any final points that we want to add to government pensions and when I die?
Just to clean up the application, or you can do it all online nowadays. So if you do have a My Services Canada account, you can do it all through there. And then like you mentioned, Kevin, there's all the different forms listed on the slide there that if you want the paper copy, you can do it that way. And for CPP specifically, I'll just reiterate your point. CPP can only make back payments for 12 months. So if you're too delayed in applying, you might miss some of those payments because they only do a look back of 12 months when they're doing that period. So I think we covered a lot of detail in a small amount of time. So if you have questions on that, let us know. We're happy to dive a little deeper into a topic, or maybe you got a question on a different topic. Happy to help out. You can visit us, chatwithclintonandkevin.com. Always welcome your questions. I think we covered it well. So until next week, everyone take care.